Welcome back, everyone. Today we're going on a deep dive, a fascinating one, I think. We're going to be exploring this whole world of, artificial neural networks,
A&Ms, yeah.
ANNs, and how they're being used to try to predict the stock market.
Yeah, it's pretty interesting stuff.
It is. And you've given us some really amazing sources here that go into everything from how they work to why they're supposedly so good at stock predictions. So,
Yeah, there's a lot of hype around it, but also some really promising results from what I've seen.
exactly. So that's what we're going to be unpacking today. I think our goal is to really take our listeners beyond just the headlines, right? To help them really understand how these systems work, what their limitations might be.
Right, and what it all means, right?
Yeah, what it all
Yeah.
means for, the future of investing.
Whether you're a day trader or just someone kind of dipping their toes in.
Exactly.
Yep.
Okay, so before we get too deep into the technical stuff, I think it's helpful to kind of set the scene, right?
Yeah, definitely.
I mean, everyone knows the stock market. It can be a wild ride.
It is super unpredictable.
But why? Like, what makes it so hard to predict?
Well, I mean, think about it this way.
Okay.
Like, imagine if you were trying to predict the weather, but instead of just temperature and wind and all that, you had to factor in like, oh, I don't know, global politics,
Whoa.
consumer confidence,
Hmm.
rumors spreading on social media,
Gosh. Yeah.
all this crazy stuff. It's kind of like that with the stock market. It's just there are so many things that can influence it. The source material actually mentions some interesting factors, like obviously you have things like GDP growth, oil prices, even natural disasters can kind of have this ripple effect.
Okay.
You know,
Yeah.
and it's not just numbers. It's this complex system influenced by everything that's happening in the world.
And of course, there's the human element, right? We can't forget about that.
Oh, that's huge.
People don't always act rationally, especially when it comes to money.
No, not at all. And that's one of the reasons why some of the traditional methods for, like fundamental analysis, technical analysis,
Right, the classic stuff.
yeah, they can be useful, like starting points, but they're not always enough, right?
Yeah.
They kind of struggle to account for all of the crazy stuff that can happen.
Yeah. So enter these ANNs, right?
Yeah, that's right. Yeah.
Supposedly, they're able to handle all of this
So
chaos.
designed to, yeah.
But before we even get into how they do that, can you can you give us a quick explainer on what an artificial neural network actually is? Like, what are we even talking about here?
Okay. So imagine like a network of interconnected nodes, kind of like a digital brain, if you will,
Okay, I like that.
where each of these nodes is kind of processing a little bit of information.
Hmm.
And these nodes are organized into layers. So you have this input layer. That's where all the raw data goes in. So like stock prices, economic indicators, even like news headlines, that kind of thing.
Yeah, okay.
And then you have these hidden layers where all the magic happens.
Okay, the hidden layers. Intriguing.
Yeah, so the nodes in those layers, they process this information, right?
Yeah.
They look for patterns, they look for relationships, and they pass those insights onto the next layer. And then finally, you have the output layer. And that's where the prediction comes out, like whether a stock is likely to go up or down or whatever it is you're trying to predict.
Okay, so it's processing information, it's finding patterns, making predictions, but it still feels kind of, I don't know, abstract to me. Can you give us like a concrete example of how this might work in the real world?
Sure, yeah. Actually, there was a really interesting example in one of the sources where an ANN was used to predict a surge in the stock price of this pharmaceutical company. And it did it by not just looking at like past stock data, but also by analyzing like news articles and even social media posts. And what it picked up on was this like growing buzz around this potential breakthrough drug that the company was developing. And at first, the human analysts were kind of skeptical,
Yeah, I bet.
but the ANN turned out to be right.
Oh, wow.
The stock price went way up.
So it was like it was able to see something that the humans were missing.
Yeah, exactly. It was able to connect the dots in a way that we couldn't.
Okay, so this is cool, but how does it learn to do that? Like the source material mentions things like backpropagation and gradient descent, which sounds super intimidating.
They sound scarier than they are,
Right,
honestly.
right.
Think of it like this. Like you're learning to play a new video game. At first, you're going to make a lot of mistakes, right?
Hmm.
But each time you mess up, you learn something, you adjust your strategy, and you get a little bit better.
Right, you level up.
Yeah, exactly. And that's kind of what backpropagation does for an ANN. It basically compares the ANN's prediction to like the actual outcome,
Mm-hmm.
and then it adjusts the connections between those nodes.
Mm-hmm.
So it's essentially learning from its mistakes.
So it's practicing, just like we do.
Yeah, exactly. And gradient descent, that helps kind of guide that learning process, make sure that the ENN is, moving in the right direction.
Okay, so it's like a compass.
Yeah, sort of.
Okay, so we've got this like digital brain that's learning from its mistakes, getting better over time. That's cool. But why are ANNs supposedly so good at specifically stock prediction, like as opposed to just other types of prediction?
Right. So remember all those factors we talked about earlier
Yeah.
that make the stock market so hard to predict, like the complexity, all the noise, the fact that humans are involved.
Yeah, all the craziness.
Yeah, well, those are precisely the challenges that ANNs are like designed to overcome.
Okay, I'm intrigued. Lay it on me. What are those advantages?
Yeah. Okay, so first off, ANNs are amazing at filtering out the noise. Like they can recognize patterns and trends even when the data seems completely random,
It's like they have noise-canceling headphones for the market.
Yeah, exactly. So it's not getting distracted by every little blip. And this kind of leads into another advantage, which is that ANNs are really good at handling nonlinear relationships, which basically means that, in the real world, things aren't always directly proportional.
Right.
Like small changes can have big effects.
Yeah.
And traditional models often struggle with that, but ANNs can like embrace that complexity.
Can you give an example of what you mean by nonlinearity in the stock market?
Sure. Let's say a company releases a new product and it's like kind of met with a lukewarm reception, right?
Yeah.
A traditional model might just see that and be like, oh, small dip in sales, maybe a minor adjustment to the stock price. But an ANN might be able to pick up on like these subtle cues, right? Like social media sentiment for expert reviews, maybe even competitor activity, and realize that like this product launch is actually a much bigger deal,
Oh, interesting.
like a major turning point for the company. And that could lead to like a way bigger drop in the stock price.
So it's like seeing the bigger picture, the story behind the numbers or something.
Yeah, exactly. And another big advantage is adaptability.
Mm-hmm.
The stock market's always changing, right? New trends emerge, old ones disappear, and ANNs, they don't just learn once, they keep learning.
So they're constantly evolving.
Right. They can adjust to new information and refine their models and kind of stay ahead of the curve.
That's pretty cool.
Yeah. And then there's this like most intriguing aspect of all, which is the ability to uncover hidden patterns.
Oh, yeah. We got to talk about that.
Yeah, like these are connections and trends that humans might never even notice,
Mm-hmm.
but they can be incredibly valuable for prediction. It's one of the things that makes ANNs both so powerful and also kind of mysterious. Like we don't always fully understand how they arrive at their conclusions, but we can see that they often work.
It's both, exciting and a little bit unnerving.
Yeah, like they're seeing things that we can't even perceive.
Exactly. All right. So we've established that ANNs have some serious advantages when it comes to stock prediction. But let's talk about the process, right? Like, how do we actually build one of these things? Is it just like throw a bunch of data at an ANN and hope for the best?
If it were that easy, we'd all be rich, right?
Right.
No, the reality is it's a lot more complex than that. You need expertise. You need to understand the technology, the market itself. It's a whole process.
So break it down for us. What are some of the key things to keep in mind when you're building one of these prediction machines?
Okay, so the first thing, and probably the most important thing, is data.
Okay.
And not just any data. I'm talking about high quality, relevant data that's been, carefully curated.
So garbage in, garbage out.
Exactly. If you feed bad data to your ANN, you're going to get bad predictions out. The source material mentions this a lot, like the importance of data cleaning, normalization, getting rid of errors, inconsistencies, making sure it's all formatted in a way that the ANN can actually understand.
So it's like preparing a gourmet meal for your digital brain.
Yeah, exactly. You're not just going to throw random ingredients in there and hope for the best.
All right. So we fed our ANN a healthy diet of data. What's next?
Training. So that's where we actually teach the ANN how to make sense of all this data, and how to make accurate predictions.
Like sending it to school.
Yeah, exactly. It's got to learn.
Okay. So how do we actually do that?
Well, we use something called supervised learning, which is basically where we provide the ANN with what's called labeled data. So, meaning we tell it what the correct output should be for each input.
Okay.
So like, for example, we might feed it historical stock data along with the actual price movements that followed, right?
Yeah.
And then the ANN uses that information to adjust its own internal connections.
Yeah.
And it learns to kind of make predictions on its own.
It's like giving it a textbook with all the answers in the back,
Exactly.
so it can check its work.
But we also need to make sure that it's not just memorizing the answers, right?
Right.
That it's actually understanding the concepts and that it can generalize that knowledge to new situations.
Ah, okay. So it's like it's got to actually learn how to think for itself.
Right. Exactly.
How do we know if it's doing that? How do we know if it's not just getting lucky?
Well, that's where testing and validation come in.
Yeah.
So we split the data into different sets, one for training, one for validation, and one for testing.
Okay.
And we train the ANN on that training data, and then we use the validation data to make sure it's not overfitting.
Overfitting, that sounds like a problem.
It is a problem.
Yeah.
It's basically when the ANN becomes too specialized to the training data, and it loses its ability to generalize to new data.
So it's like a student who aces every practice test but then bombs the real exam.
Exactly. Because they haven't actually learned the material, right?
Right. Okay. So we're teaching the ANN to actually think, not just parrot back what it's been shown.
That's the goal, yeah.
And once we've, trained and validated our ANN, how do we actually evaluate its performance? Like, how do we know if it's good enough to, trust with our hard-earned money?
Well, there are a bunch of different metrics that we can use. Things like correlation, which basically measures how closely the predicted price movements match the actual price movements. And then there's error rates, which basically quantify how far off the predictions are from reality.
So higher correlation, lower error rates, that's what we're looking for.
In general, yeah.
Yeah.
But, it's important to remember that no model is perfect.
Right.
Especially when we're talking about something as unpredictable as the stock market.
Yeah, no crystal ball.
Yeah, exactly. So it's not about finding something that's going to tell you exactly what's going to happen. It's about finding a tool that can give you an edge, help you make more informed decisions.
Okay. So this is all very fascinating. But I think the big question that everyone's thinking is, does this actually work, in the real world? Are people using these ANNs to make money in the stock market right now?
Yeah, they are. I mean, ANNs are being used by hedge funds, by investment banks, even by, individual traders.
Really?
Yeah, to gain an advantage in the market. And, the results are pretty impressive from what I've seen.
Can you give us some specific examples of how this is happening?
Sure. So there's this one hedge fund that was able to get way higher returns than the market average by using this ANN powered trading system.
Wow, that's amazing.
Yeah.
So this is real. This is happening.
It is. It's happening right now. And, as these systems get more sophisticated and more accessible, we're going to see this trend continue.
So it's not just for Wall Street wizards anymore.
Nope, not at all. I mean, there are platforms and apps that are making ANN powered insights available to regular people. It's like having a personal AI financial advisor in your pocket.
Okay, that's pretty exciting. So it sounds like ANNs have the potential to really revolutionize the way we invest. But before we get too carried away, let's talk about some of the limitations, the potential risks here.
Right. Yeah. I mean, as with any powerful technology, there are always potential downsides. One of the concerns is that if everybody starts using the same ANN-driven predictions, it could create a sort of self-fulfilling prophecy.
Oh, interesting. What do you mean by that?
Well, let's say everyone thinks the stock is going to go up because the ANN says so.
Right.
So everybody buys it, and then it actually does go up.
Right.
Even if there wasn't a good reason for it.
Because everyone's doing it.
Exactly. It's a potential risk that we got to think about. It kind of highlights how important it is to not just blindly follow any prediction, no matter how, fancy the system is that created it.
Right. You still have to think for yourself.
You do. Human judgment is still crucial.
The source material also talks about this risk of overfitting, which we talked about a little bit earlier. Can you just remind us what that is and why it's a problem?
Yeah. So overfitting is basically when the ANN gets so focused on the specific details of the data it was trained on that it loses its ability to generalize. It's like that student who memorizes all the answers for the test.
Right.
But doesn't actually understand the material.
Okay, yeah. So how do you prevent an ANN from overfitting? Is that possible?
Yeah, there are a few techniques that data scientists can use, like regularization, which basically adds constraints to the model to prevent it from becoming too complex. And then there's cross-validation, which is where you test the model on different subsets of the data just to make sure it's performing well across the board.
So it's a lot of work to make sure that these things are reliable.
It is. It takes expertise. But the good news is that the tools are getting better. They're getting more automated.
So it's becoming more accessible.
Exactly. I mean, there are software tools and platforms now that can help even non-experts to build these models.
Interesting. So as these tools get better and as the data sets get larger, I imagine we're going to see even more impressive results. Right?
Oh, absolutely. The potential here is huge.
Okay, so I'm curious about the different ways that ANNs are being used right now for stock prediction. Like, are there certain types of predictions that they're particularly good at?
Yeah, there are. One area that's showing a lot of promise is in predicting earnings surprises.
Earnings surprises. Okay. What does that even mean?
So it's basically when a company announces earnings that are like significantly higher or lower than what analysts were expecting.
Oh, okay.
And those surprises can have a big impact on the stock price, right?
Yeah.
So being able to predict those is very valuable.
So how do ANNs do that?
Well, they can analyze all sorts of data, like historical earnings data, news articles, social media sentiment, and even what's called alternative data sources.
Alternative data? Like what?
Stuff like satellite imagery or web traffic patterns.
Wow.
All sorts of things that might give you a clue about how a company is actually performing.
So they're like piecing together this puzzle using all this information that we wouldn't even think to look at.
Yeah, and because they can process so much information so quickly, they can often spot those patterns before human analysts even notice them.
That's amazing. Okay. Another area that's really fascinating to me is this whole thing about algorithmic trading, or algo trading, as it's often called.
Yeah.
Can you tell us a little bit about how ANNs are being used there?
Sure. So algo trading is basically using computer programs to automate trading decisions. These programs can analyze market data in real time, and then they can execute trades way faster than any human could.
Right.
And ANNs are becoming increasingly important in these systems because of their ability to adapt to changing market conditions and to learn from all that data.
So it's like having a super fast, hyper intelligent trader working for you 24/7.
Kind of, yeah. But, it's important to remember that algo trading can be risky.
Of course.
It's not for everybody. It requires a lot of understanding of the markets and the technology.
So it's not a get-rich-quick scheme.
Definitely not.
Yeah.
It's a tool that can be used effectively by experienced traders, but it can amplify amplify losses if you're not careful.
Right. Okay, so we've talked about earning surprises. We've talked about algo trading. Are there any other areas where ANNs are making a big difference in stock prediction?
Yeah, one that's getting a lot of attention these days is sentiment analysis.
Sentiment. What does that mean?
So it's basically referring to the overall mood or feeling of the market,
Okay.
or towards a particular stock. So sentiment analysis uses natural language processing techniques where it's analyzing text data, stuff like news articles, social media posts, even company filings,
Okay.
to figure out if people are feeling positive or negative about a company or just about the market in general.
So it's like trying to read the collective mind of the market.
Yeah, kind of. And ANNs are proving to be really good at this because they can process like enormous amounts of text data and find those patterns in language that we might miss.
Okay, so how is that actually useful in terms of predicting the stock market?
Well, so if sentiment is turning negative towards a company, it could be a sign that investors are losing confidence, right? And that could lead to a drop in the stock price. On the other hand, if sentiment is really positive, it could suggest that, investors are bullish on the company. And that could drive the price up.
So it's like another piece of the puzzle.
Exactly. Just another data point that can help you make a decision.
Okay, so we've seen how ANNs are being used for, predicting earnings surprises, for algo trading, for sentiment analysis. It sounds like they're already having a pretty big impact on the financial world.
They are, yeah. And, as this technology keeps getting better and more accessible, I think we're going to see, even more uses for it.
It's really exciting to think about the possibilities, but it also makes you wonder about, some of the potential challenges, like some of the ethical questions that this raises.
Right.
Like, what happens if these systems get so good at predicting the market that risk basically becomes obsolete?
That's a great question. And I don't think there's an easy answer. I think it's important to remember that, even the most advanced ANN can't perfectly predict the future.
Right. It's not a crystal ball.
No, exactly. The stock market is influenced by so many things, and some of them are just fundamentally unpredictable. You got human behavior, you got global events, you got just random chance.
So there's always going to be an element of risk, no matter how good our technology gets.
I think so.
So it's not about eliminating risk, it's about managing it better.
Yeah, exactly. And that's where ANNs can be really helpful, actually. Like,
Yeah.
they can help us to better understand risk,
Yeah.
to quantify it and to make more informed decisions.
Okay. So even in a world where AI is playing a bigger and bigger role, human judgment is still going to be essential.
Oh, absolutely. We're going to need to be able to interpret the data, to understand the limits of the models, and ultimately to make decisions based on, not just quantitative analysis, but also our own judgment and experience.
So it's not about man versus machine, it's about man with machine.
I think that's a great way to put it. It's about finding that balance,
Right.
using the best of both worlds.
I love it. All right, so we've covered a lot of ground here. We've talked about what ANNs are, how they work, their advantages, their limitations. We've seen how they're actually being used in the real world right now. But, I want to leave our listeners with something specific to think about as we move on to the next part of this deep dive.
Okay.
We've talked about the potential for ANNs to, uncover hidden patterns in the market, but what if those patterns are so subtle, so complex that we can't even understand them? Like, what if these systems are seeing things that we literally just can't grasp?
Ooh, yeah, that's a good one.
Right. Makes you wonder.
It does. It's a question that gets to the heart of what makes AI so interesting, but also potentially, kind of scary.
Right.
Like, are we creating something that's ultimately going to surpass us? Not just in, processing power, but in true understanding.
Ooh, a big question. And one that we'll continue to explore in the next part of our deep dive.
I can't wait. So picking up where we left off, this idea of ANNs uncovering patterns that we can't even understand.
Yeah.
Kind of a mind-blowing concept, isn't it?
It is. It really makes you wonder, like, are we creating something that's going to, like, ultimately surpass us? Not just in, processing power and speed, but, like, true understanding.
Right. Like, are we building our own successors in a way? But, instead of fearing it, what if we look at it as an opportunity?
Okay, I like that. An opportunity. What do you mean?
Well, imagine being able to, like, tap into these insights that are completely invisible to us right now.
What if these ANNs could reveal like connections between things that seem totally unrelated or like predict market shifts based on things we haven't even thought of?
That would definitely be a game changer. I mean, it'd be like, instead of trying to outsmart the market, we'd be trying to understand what the ANN is telling us.
Right, exactly. It would require a whole different way of thinking. Instead of just looking for information that confirms our own biases, we would have to be open to these new perspectives, right? Insights that might challenge our assumptions.
It's almost like learning a whole new language, like the language of the ANN.
Yeah, I like that. And the more we learn that language, the more we might discover about the market. And maybe even about ourselves.
That's a cool thought. So, stepping back for a second, we've talked a lot about the potential benefits of using ANNs in this way. But what about the downsides? Like, are there any risks that we should be aware of? Well, as with any powerful technology, there's always, the potential for things to go wrong. One concern is that, if everybody starts relying on the same ANN-driven predictions,
Yeah.
it could create this sort of self-fulfilling prophecy.
Oh, interesting. How so?
Well, think about it. Like, let's say everyone thinks stock is going to go up because, the ANN says so.
Right.
And so they all buy it.
Hmm.
And because of that, it actually does go up.
Even if there wasn't like a fundamental reason for it to go up in the first place.
Exactly. So, it's this potential risk that we need to think about. It just shows how important it is to not just blindly follow the machine, right?
Right.
We still need to use our own judgment.
Absolutely. And the source material also mentions the risk of overfitting, which we talked about earlier. Can you just remind us what that is again and why it's a problem?
Yeah, so overfitting is basically when the ANN becomes like too focused on the specific data it was trained on. So it loses its ability to generalize to new information. It's like that student who, memorizes all the answers for the test but doesn't actually understand the material.
Right, they can't apply it to a new problem.
Exactly.
So how do you prevent that from happening?
Well, there are a few different things that data scientists can do. One technique is called regularization. And that's basically where you add constraints to the model to prevent it from becoming too complex and too specific. And then there's cross-validation, which is where you test the model on multiple different subsets of data just to make sure it's performing well across the board.
So it's a lot of work to make sure these things are actually reliable.
It is, yeah. It takes a lot of expertise and careful tuning, but the good news is the tools are getting better.
That's good.
Yeah, so it's becoming a little bit easier to prevent overfitting.
Okay. So I'm curious about the different ways that ANNs are actually being used for stock prediction right now. Like, are there specific type of predictions that they're particularly good at?
Yes, there are. One area where ANNs are really showing a lot of promise is in predicting earnings surprises.
Earnings surprises. What does that mean?
So it's basically when a company announces earnings that are like way higher or way lower than what analysts were expecting.
Oh, okay.
And these surprises, they can have a huge impact on the stock price.
Right, because it's unexpected.
Exactly. So being able to predict them is super valuable.
So how do ANNs do that? Like, what's the secret?
Well, they can analyze a bunch of different data,
Yeah.
like historical earnings data, news articles. They can even look at social media sentiment
Wow.
and even what are called alternative data sources.
Like what?
Things like satellite imagery or web traffic patterns, all these things that might give clues
Yeah.
about how a company is actually performing.
So it's like they're piecing together a puzzle, but using all these pieces that we wouldn't even think to look at.
Exactly. And because they can process so much information so quickly, they can often spot these patterns like way before any human analyst could.
That's pretty amazing. Another area that I think is just super fascinating is this whole concept of algorithmic trading or algo trading, as people call it.
Yeah,
Can you tell us a bit about how ANNs are being used in that world?
sure. So algo trading is basically using computer programs to make trading decisions automatically.
Right, right.
So these programs, they analyze the market data in real time.
Mhm.
They identify patterns, they execute trades, and they can do it way faster than any human trader could.
So it's like having a super powered trader working for you 24/7.
Yeah, kind of. But, it's important to remember that algo trading can be really risky.
Yeah,
It's not for everybody. It requires a deep understanding of the market and how these systems work.
So not a get rich quick scheme.
Definitely not. It can amplify losses just as easily as it can amplify gains if you're not careful.
Right. Okay, so we've talked about earning surprises, we've talked about algo trading. Are there any other key areas where ANNs are really making a difference in stock prediction?
Yeah, one that's getting a lot of attention is sentiment analysis.
Sentiment analysis, what is that?
So it's basically looking at the overall mood or feeling of the market,
Right.
or towards a specific stock. And it uses natural language processing techniques. So it's analyzing like text data, basically. Things like news articles or social media posts, even company filings.
Wow, okay.
And it tries to figure out, are people feeling positive or negative?
So it's like trying to read the collective mind of the market.
Yeah, that's a good way to put it.
Yeah.
And ANNs are actually really good at this because they can process just like huge amounts of text data and find those subtle patterns in language that we might miss.
And how's that actually used for stock prediction? Like, what does that tell us?
Well, if you see that, the sentiment is turning negative towards a particular company, it could be a sign that investors are losing confidence.
Right.
And that could lead to a drop in the stock price. And conversely, if sentiment is like super positive, it might suggest that investors are really bullish.
Mm-hmm.
And that could push the price up.
So it's just another piece of the puzzle. right?
Exactly. Just
Yeah.
another data point that can inform your decision.
Okay. So we've seen how ANNs are being used for, predicting earning surprises,
Yeah.
powering these algo trading systems, and analyzing market sentiment. It seems like they're already having a pretty huge impact on finance.
Yeah, they are. And as these technologies continue to evolve, and become more accessible, I think we're going to see even more innovative applications.
It is really exciting to think about all the possibilities, but it makes me wonder about some of the, the bigger picture challenges or even ethical considerations. Like, what happens if these systems become so good at predicting the market that the whole concept of risk just becomes obsolete?
That's a great question. And it's one that I don't think has a simple answer. I think it's important to remember that even the most advanced AI system can't perfectly predict the future.
Right, right. There are always going to be things that we can't foresee.
Exactly. I mean, the market is influenced by so many factors.
Hmm.
Human behavior, global events, even just plain old random chance.
So there's always going to be some element of risk, no matter how good our technology gets.
Yeah. I think that's a safe bet.
So it's not about eliminating risk, it's about managing it better.
Exactly. And that's actually where I think ANNs can be particularly helpful. They can help us to understand risk better,
Yeah.
to measure it, and to make more informed decisions.
Okay, so even in a world where AI is playing a bigger and bigger role in finance, like human judgment is still going to be crucial.
Oh, absolutely. We're going to need to be able to, interpret the data, to understand what the models are telling us, and
Yeah.
ultimately make decisions based on, not just the numbers, but also our own intuition and our experience.
So it's not man versus machine, it's man with machine.
Yeah, I think that's a great way to put it. It's all about finding that right balance,
Yeah.
leveraging the strengths of both.
Love it. All right, well, on that note, I think it's time to move on to the final part of our deep dive, where we're going to be exploring some of the brighter implications of these technologies, for the future of investing. So we spent this deep dive, going deep into this world of ANNs and how they're being used for stock prediction. We've seen how they can analyze all this data, find patterns that we might miss, and maybe even make predictions that we never thought possible.
It's pretty amazing stuff. And honestly, I think we're just scratching the surface of what this technology can do.
Yeah. But as with any, really powerful tool, it's important to think about the bigger implications,
Right.
right? Like it's not just about making money, it's about, how these systems could actually change the entire financial landscape.
Right. And one of the biggest questions that this raises is like, what happens to human expertise?
Yeah, exactly. Like, will we even need human analysts and portfolio managers in a world where algorithms can do it all?
Well, I don't think we'll see human experts disappear completely, but their role is definitely going to change.
In what way?
Well, I think instead of focusing on, these tasks that can be automated, they'll need to develop skills that complement AI. Things like strategic thinking or risk management, client communication.
So it's about finding that balance, right, between human intelligence and artificial intelligence.
Exactly. And that brings up another really important point, which is, the need for transparency,
Right.
explainability in these systems.
Like, if we're going to trust AI to make these decisions that affect our money, we got to know how it's making those decisions.
Exactly. The black box problem.
Right, right. How do we make sure that these algorithms are not only accurate, but also, fair, unbiased?
Yeah. And that's a challenge that a lot of smart people are working on right now. There's this whole growing field called explainable AI.
Explainable AI.
Yeah, XAI. And it's focused on developing ways to make these systems more transparent, easier to understand.
So it's not just about building smarter algorithms, it's about building algorithms that we can trust.
Exactly. And that, I think, is where human oversight and regulation will always be important. We got to make sure that these technologies are being used responsibly, ethically.
So it's a societal challenge as much as it is a technological challenge.
It really is. We need to have these conversations about how we want AI to shape the future of finance. What kind of world are we trying to create?
That's a big one. What are some of the key questions that we should be asking ourselves?
Well, how do we make sure that access to these tools is fair? That they're not going to be used to make existing inequalities worse? And how do we protect against, misuse, whether it's intentional manipulation or just unintended consequences?
Yeah, those are tough questions. And it sounds like the first step is just, being aware of those potential risks and having those conversations.
Exactly. The more we talk about these things, the better prepared we'll be.
And for our listener who might be feeling a little bit overwhelmed by all of this, what would you say is like the key takeaway?
I think the most important thing is just to approach this whole thing with a sense of informed curiosity.
Okay, I like that.
Don't be afraid to learn more about how it works, explore the potential, but also be critical, ask questions, and be part of the conversation.
So it's not about being a tech expert, it's about being an informed citizen.
I think that's a great way to put it.
Awesome. Well, I think we've covered a lot of ground today in this deep dive into ANNs and stock prediction. We've seen how these systems are, already starting to change things, and we've gotten a glimpse of what the future might hold.
It's exciting and a little bit scary at the same time.
Yeah, for sure. But, it's a conversation that we need to be having.
Absolutely.
And for you, our listener, we hope this has been a valuable journey. We encourage you to keep learning, keep asking questions, and keep diving deep.
And keep listening.
Thanks for joining us.